Jorge Montepeque, Managing Director, Benchmarks Onyx Capital Group. Uh, Jorge, how much of this rise out of that tight band that we've seen over the recent months of the first quarter, breakout above 85, is due to geopolitics and an elevated premium, or is there more fundamentals in this marketplace from your perspective?
It is a combination. There is the greater Brent market, the greater production overall. Whatever OPEC agrees and Russia agree, which, as we know, in the most recent event, Russia is calling for a further reduction or enforcement of the agreements they have with OPEC. Those things affect the market, and they're outside of whatever is going on politically in the Middle East. But due to the confrontation, of course, there is a sense that something bad that affects supply could happen in the greater term. So that's where the combination comes in. And on a realistic basis, the Houthis have affected transit in the Red Sea. And by affecting that transit, they have added weeks of sailing time to the ships, avoiding that area, and has added significant consumption of fuel oil as the ships have to travel further. The consumption of fuel oil on a bigger crude oil basis are not significant because they may be between around 100 barrels a day, but they add to the overall consumption of hydrocarbons and definitely affect the efficient operating of the oil markets. So I would say that if we would see Israel agreeing to not intervene further in Israel and exploring a ceasefire, and the Houthis agreeing to the ceasefire and the free transit of ships, we could see an easy $5 off the market, like immediately, with a 5 to 10 correction. But not anything over that, because the market is still constraining its supply.
There's been a lot of talk, again, I mean, it seems to be forever present. I'm wondering, do we care anymore? Is Jay Powell going to cut rates this year? Is he not? When is he going to do it? Is it relevant for the oil markets anymore, Jorge, the direction of travel, what and how fast the central bankers reduce the price of money?
Yes, it is. The creation of debt by the US government and any other country in the Northern Hemisphere remains at a very critical pace. At the same time, it is clear that despite the creation of money, which has been by mountains, the economies in the Northern Hemisphere, perhaps with the exception of the US, are doing very badly, from Japan to Korea to China in particular, and then in Western Europe. So inflation nominally has come down, and that gives the various governments the implicit right to lower headline interest rates. At the same time, they have so much debt that they need to buy money from the market by issuing debt and getting the money. And that is costly, and that acts the opposite in the cost of money. So Powell will try to reduce interest rates. But
not because of inflation, but because of the price of money? Because of the debt? The lead story of the Financial Times this morning is the warning from the budget office in the Congress that things are getting close to the edge of the cliff.
Yes, they are. Yes, they are. So they will try to maintain and reduce interest rates, while at the same time borrowing ever-increasing amounts. Because as we discussed the last time, we're borrowing close to $1 trillion of US dollars every 100 days. And even the Citadel CEO came in to warn the market that this is unsustainable. it is unsustainable. So we are now here playing out into the beginning of the reset. And that beginning of the reset is when people are only attracted to invest in US instruments at higher interest rates, and then that takes away the power from power. When that happens, inflation will kick in with a vengeance. This is the reason why I have been very consistent since last year that we're on an upward trend in the price of oil. Oil is very moderate because it has to do with the overall economic performance. But if you contrast the performance of oil with gold, gold has started to trend up. It's the beginning of that reset and that realignment of funds which people do away from treasuries and treasury instruments into alternative equities. They haven't yet done that fully in oil.
Or Bitcoin. Or Bitcoin, I say.
Yes, it's another indication that people are reallocating. As they reallocate, at some point, oil will pick up that steam. And I have been pretty clear that that steam will start in earnest by June about the rise in energy and the rise in inflation. So it is a very critical time in the functioning of global markets and the performance of central banks. I want to add something before you move on.
Please.
You focus as well on the losses that the central banks are making. They're enormous. The Bundesbank lost money, the EU lost money, the Swiss bank lost money, the Feds lost money. I forget the precise amount, but the Feds in the last 12 months have lost about $156 billion. And that line will continue to generate losses, and hence it gets transferred into monetary creation, which then creates inflation.
Jorge, just picking up on that, the sort of market implication. I mean, with that, we see the tightness already, never mind tightness in crude, but tightness in middle distillates, gasoline, going into the sort of peak summer driving season, Jorge. And now we're also seeing inventories in the US consistently drop each week when it's reported by the EIA there. There's some real tightness coming into the middle distillates, the gasoline, aviation fuel, going into the peak demand period. Your thoughts, Jorge, on the outlook for that and the price at the pump going into the election cycle, as Rad mentioned?
I am so glad you asked me this question, because as you were just in the previous segment talking, it comes to my head that there is a serious, strange, and ironic alignment between Russia and the US. Both countries have been subject to terrorist attacks. Both countries see ISIS as the enemy, or have seen it as the enemy. And both countries have suffered from those actions and have engaged in military action. So the US and Russia are aligned in that fight. In addition, both countries are also aligned in the fight against terrorists or military men that attack facilities and create inefficiency in markets. So the Houthis are disrupting trade supply. The Ukrainians are disrupting gasoline supplies. Both of those actions lead to a higher flat price, as we were discussing, whether it's 10 or 5 or something, it adds to the overall pressure of the markets. And in the US directly, gasoline prices are now on the cusp of around $4 a barrel. The American consumer is definitely not happy when it crosses that line. And this is very damaging to the US. So the whole system right now is poised for gasoline to cross $4. And we can feel the bullishness in the crude market as we head above 85. It tested, come down, and then it pushes ahead again. So as we head into the summer, with the prevailing conditions, I am very friendly towards 85, 90. As we go beyond June and we print more money, and that depends how much more money we will print, but it is likely that we are in the 90, 100 level. So it is coming.
Last word with you. I wanted to get your thoughts on the sort of noise coming out of CERAWeek, of course, one of the biggest energy, oil and gas events in the world, in the calendar, at least from a thought leadership point of view. My question, Jorge, is really this the sort of mojo back in the oil and gas industry to be so dismissive of the energy transition in a very kind of overt way. Your thoughts on what you heard coming out of CERAWeek, Jorge, and particularly if you'd address that point, your thoughts on it.
Yeah, I think the industry, and I think you're referring, or I would refer in particular to the comments by Saudi Arabia and also by Exxon. They were kind of unusual that they were on your face, essentially saying, forget about transition, oil it is. By the way, I'm here in Singapore, and my friend has a nice Tesla. It's a good car. But I have been trying to explain to him, unsuccessfully, that any energy transition is subsidized, and that therefore it doesn't work at face value. Because for something to be truly economic and to have a right to compete in the economic space, it should be without subsidies. And then we can see that it works. Take that to say that I am not against transition or in favor of transition. I am in favor of good decision-making, and good decision-making requires no subsidies. I have the feeling that oil companies are becoming aware that the power of governments to force transition to subsidies is ending. And we were having this discussion a couple of nights ago as well, that if a government is running out of money, and all governments are running out of money, and they have to make a decision between funding health or funding the acquisition, the purchasing of a Tesla car, which way are they going to go? They're going to forget about these efforts to transition and go into harsh economic decisions. And in a harsh economic decision environment, oil wins. And I think the executives are sensing that.
Jorge, just to pick up on a comment in the chat room saying that Jorge's not bearing in mind the fact that the cost of climate change on these governments is much greater than the cost of subsidizing the transition. Your thoughts on that from a policy point of view, choices?
Well, I like to study a little bit of geology and the geological ages. And really, my experience in this planet from a geological point of view is irrelevant. I was in a museum in Europe maybe 3 weeks ago, and they were noting that the Europeans of the time, about 6,000 years ago, made it onto the flatlands of Europe because the temperature had gone up a little bit. And that enabled them to hunt and to live and to develop housing. So whoever is thinking that climate should be the temperature you experience today needs to wake up and realize that climate changes, and it changes all the time. We may be the cause of it at the margin, or we may not, who knows? We need to live today and nobody can forecast what the future will do in terms of climate. It's impossible.